Top 10 issues facing crypto investors. The cryptocurrency market is one of the most rapidly growing markets today, with new currencies popping up every day and investors flocking to these new opportunities. Unfortunately, there are some risks that come with this kind of growth, and as an investor, you need to be aware of these dangers before you start pouring your money into different types of digital currency. With that in mind, let's take a look at the top 10 issues facing crypto investors today. 1. What to do with funds stuck on exchanges. You should never leave your funds on an exchange. You should never leave your funds on an exchange. What happens if one gets hacked? Your coins get stolen. If you have coins on multiple exchanges, chances are that some of them will get hacked sooner or later. 2. Security and storage. Security and storage are two primary concerns for cryptocurrency investors. If you keep your crypto in an exchange, be sure it has an insurance policy, so that if something does happen to your investment, it can be recovered, and not just by you. It's also a good idea to store any crypto you own on a hardware wallet instead of a computer or mobile device. One popular model is Trezor, which allows you to store Bitcoin and other cryptocurrencies offline. 3. Is it too late? Are you one of those people who wishes they'd invested in cryptocurrency when it was still a burgeoning technology? If so, here's some bad news. You might be too late. However, don't give up hope. There are ways to invest in crypto even if you missed out on earlier opportunities. 4. How safe are exchanges? One of the biggest cryptocurrency investing issues is how safe exchanges are. Are your funds insured? Can you access your funds if an exchange goes down? What about what is sometimes referred to as a 51% attack? If a bad actor can control more than half of a blockchain, he or she can reverse transactions and essentially steal from everyone who uses that blockchain. Additionally, exchanges are often targets for DDoS attacks and other cyber attacks, which can create massive issues for crypto investors and their portfolios. 5. Are ICOs scams? Initial coin offerings, ICOs, have been one of blockchain's most disruptive trends, democratizing venture capital and unleashing a torrent of cash for cryptocurrency startups. But there's a dark side to ICOs. Every now and then, an ICO is revealed to be a scam. Most recently, startup Confido disappeared after raising $375,000 in an ICO. 6. Exchanges and regulations. While exchanges and regulations pose risks to crypto investments, they also provide opportunities. In countries with tight regulations, such as China and South Korea, the number of initial coin offerings, ICOs, has dropped dramatically since 2017. 7. Wallets and address security. One of the biggest concerns surrounding cryptocurrency is wallets and address security. If you're investing in crypto, you need to know that your money is being stored safely. Cryptocurrency wallets store public and private keys that are specific to each individual user and his or her coin balances. If you don't follow best practices for storing coins, you risk losing your investment. 8. Market fluctuations. When it comes to cryptocurrency investing, timing is everything. The market fluctuates constantly, and if you buy at just the wrong time, say when Bitcoin is crashing, you could lose a lot of money. Since prices can shift rapidly from one moment to another, don't wait until your investments are plummeting before trying to sell. Instead, set alerts that will trigger as soon as a specific price point has been reached. That way, you'll be able to get out before things start getting really bad. 9. Liquidity. Liquidity describes how easily an asset can be converted into cash. It's one of, if not the most important aspects of trading in any market, and is especially important when it comes to cryptocurrencies. For instance, if you want to buy a cryptocurrency but there isn't a fiat pair available, you might find yourself having to jump through hoops just to be able to purchase some, which is less than ideal. 10. BitConnect and other Ponzi schemes. A Ponzi scheme is an investment fraud that involves paying existing investors with funds collected from new investors. So, a cryptocurrency-based Ponzi scheme would involve taking money from new crypto investors to pay off older crypto investors. It's not a legitimate investment option and is something to avoid at all costs.